Um, yeah. Welcome you all to K Trade Institute. Welcome you. But for now, as we are waiting, if you can see my chat and hear my voice loud and clearly, please let me see hi on the chat session. If you can see my chat and hear my voice loud and clearly, please let me see hi on the chat session. Okay, Galavi, you are welcome. You can see. Please let me see hi on the chat session. As you are waiting, we are waiting for 2 minutes, whether our friends can join us. Let me see hi if you can see my chat and hear my voice. Yeah. My edit, you can see. You can see and hear. Galazi can see. Yeah. Welcome you all. DJ Pause, can I see hi on the chat session if you can hear my voice loud and clearly? Please let me see hi on the chat session if you can hear my voice loud and clearly. Okay. Yeah, thank God. Okay, let's start. You don't have time. They will join us. Let's start. Let's start. Let's quickly start. We are going to look at the inside of what? Price action. I'm sure many of you are asking why am I having indicators on my screen? Yeah, I have indicators on my screen just because I want to what? Use to explain something to you. When we say let me before I will go. Okay, let me give you this. You can clearly see that this is Bollinger, right? This is Bollinger bounce, and this momentum. This momentum, and this is the MACD. Yeah, this is the MACD. So, what we do is that if we're trading with what a Bollinger bounce, you are always looking to price to show you what you want to see price at this area before you buy using the Bollinger Band. You want to see price at this area, yeah, and it's so correct that you can see the price here. Then you start buying you start placing a buy here. If you want to sell, then you look for sell entry here, good. And you take your profit. If you buy here, if you are using Bollinger, you buy here, then you take a profit here. And also we can see that we having what moving average of what the cross moving average, right? We having a cross here, and the psychology behind the cross is that if you want to sell, you want to see that the red cross has crossed what had able to cross what do you call it the green one before you start looking for selling opportunities. It tells you that you need to sell right after the cross. The same thing happened to here. As soon as this red cross, this one, this what red moving average cross, it's able to cross this one, and we see a cross middle, meaning that it tells you to what to enter. So before this one will tell, before you will see the cross, the price has already at around this area, right? Before you see the cross here, the price will be around this area, right? Good. And also the same thing happened to here. Before you see a cross, the price has what already at this area before the cross will come. And also the same thing happened to the MACD. You want to see price what giving us what some giving us a robot here before you start looking for what like selling opportunity. You want to see something like this before you start looking for selling opportunity. Then you sell to here. Then if you see oversold, then you're looking for what buying opportunities. But can you see what happened here? This tells you that those who know how to read it well, this tells you that this one is what price is ranging around this area. So meaning you are going to exercise patience for you to see meaning that this one is oversold. So you Recently, you are looking for selling opportunities here. Good. This is how we go about what indicators. You want to see overbought, oversold, then you're looking for buying opportunity. You want to see overbought, you're looking for selling opportunity. But now we are going to looking for what? A red chart. We can clearly see that all these are just what? Giving us what? It's just showing some dirty work on the chart. You can clearly see that you can't even see if, let's say, you are reading using the engulfing and then doji, and you are combining everything with the indicators, you will surely get confused. Look at here. Before you may get a cross here, price has already reached in this area. And imagine you enter a sell here, right after your entry, price rejected on you, meaning you are going to take a loss. Here is 4 hours time frame, right? And there's no way you are going to place your stop loss above here. There's no way you are going to place your stop loss above here. So you are going to place a stop loss maybe around this area. And Bollinger also tells you that as soon as price with this area, you need to what? You need to buy, right? But look at here, we can clearly see that price able to came back to this key level and still going to the downside. Can you see? Because if we're trading with the Bollinger, the more price is going down, the more we're going to have an expansion of the Bollinger, right? The more price going down, the more we are going to have an expansion of the Bollinger. So where are you going to buy, and where are you going to take your profit? And also, if price is going to the upside, the more price pushing to the upside, the more we having the expansion of what? The Bollinger, right? The more price pushing to the upside, the more we having expansion for the Bollinger, because price wanted to trade in between the Bollinger, right? So it just makes a lot of noise, and it can confuse you to enter the market at the wrong time, right? So what I want to tell you that we are interested as a KF trade. I'm not saying if you are trading with this indicator, you get it wrong. No, I won't judge. Just that I just want you to read the red chart. I would like you to always try it as much possible to avoid indicators, and make sure you read the red chart to see what is actually going in the market. Please try to mute yourself to avoid back noise. Those who just joined, try to okay, thank God. So our main topic for today is what? The insight of what? Price action. There's our topic. The insight of what? The price action. Please try to mute yourself to avoid back noise. There's what we are going to looking for. What? We are going to looking for the insight of what? Price action. And if we're reading the naked chart, it's like learning new or different language, and this helps you to know what is actually going on in the market. If we're reading the rare charts, it tells you, it helps you to know what is actually going on in the market. Let me delete everything here and see how you are going to see. Because before you learn, before you are starting reading the candlesticks and so on, you learn something about engulfing, and then dojis, and so on. So if you add a lot of indicators into your chart, how are you going to identify it? How are you going to identify the chart, right? How are you going to identify the doji? How are you going to identify the Morningstar? How are you going to identify the what do you call it? The shooting, and then the tweezers. You can't find it on the chart, right? So what you do is that if you are reading the chart, it's like you are learning new language. Do you get it? Because the candlestick self, it tells us something. Because the body and then the shape or the behavior of the market will tell you what is actually going on in the market, right? And it will tell you that what is what actually market wanted to do, or the new what phase the market wanted to take for the next hours or for the next 4 hours. Do you get it? So if you want to get the math information, or if you want to get math information about how the market is moving, you need to what? Naked your charts. You need to what? Naked the chart, because all the indicators are what? They are all based on the naked chart. So if you are using Bollinger always going like it tells you that if price reach the last Bollinger band, meaning we are going to what? Buy. But the more price is pushing to the downside, the more price going to the downside, the more Bollinger is what? Expanding. Do you get it? And also, if we are using MACD, the more price is what? Going to the downside, the more we are going to having the overbought. So where are you going to buy? So let's say you take a buy entry, because here, Bollinger will tell you to buy here, right? Bollinger will tell you to buy. But right after your buy entry, price is still pushing to the downside. MACD also will tell you to buy here, but right after your entry, price was still pushing to the downside. So you may get confused. Why? But if you're able to what? Naked your chart and read the chart, how what is actually going on in the market, you can clearly see that if recently we were having what? A support zone here, and now support has what? Breaking down. So you are not more looking for what? Buying opportunity, because you know that whenever we break support, we are no more going to looking for buying opportunity, because support breakout to become what? Resistance, right? Support breakout to become what? Resistance. So if support breakout, you are not going to looking for buying opportunity, but we are going to looking for what? Selling opportunities. And whenever we got a breakout, we consider it what? It's already in a lower price. And the rule is what? Buy at a lower price and sell at a higher price. So if price breakout and we are not interested, since price has already created a low, we want price to give us what? A high. Then we start what? Buying. We start selling from here. Do you get it? So here you can see that if we are reading the red chart, the naked chart, this will tell you the shape or the structure of the candlesticks will tell you that what? This time you need to wait for price to pull back to the key level, then you start selling to the downside. You start what? Pressing the sell trade to the downside. So can you see how? Just look at this one. Bollinger will tell you, and MACD will tell you, all the indicators will tell you that right inside here you need to start what? Buying from here. But which is wrong. They will tell you to buy from here. But right after this one, you see that if you're able to sell here, look at where you are going to take your profit. See where price able to what? Came before what? Pushing to the upside. So here it tells you that in here we having a certain zone here. We having what? What do you call it? The inverse head and shoulder, right? We having inverse head and shoulder here. So meaning you were expecting price to break out from here. Now we have a breakout here. We are expecting price to kiss this scale level, and it's able to come. So you sell here, you are now driving. You buy here, you are now driving to the upside, right? So recently we are expecting price to what? To continue to push into the upside. Do you get it? So if you are reading the red chart, the naked chart, you will clearly see. You will see what is actually what going on in the market. You are going to see what is actually going on in the market rather than what? Using what? Indicators. Please, can you hear me? Hello? If you can hear me loud and clear, let me see high on the chat session. Are we following? If you are following, please let me see high on the chat session. Yeah, okay. Let's go on. Thank you. So let's go on. So this is what we do. Because if you are reading the naked chart, it means that you are learning what? The market language. And the price action language has two different languages. And the language is what? The structure language and the candlestick body language. When I say structure language is whereby price is what? Giving, that's what do you call it? the flags, we having what? A double bottom, we having a double top, and then a triple top, and then we have what? Inverse head and shoulder, and then we having what? The head and shoulder patterns, right? That's what you call it, what? The structural language. So whenever you see something like this, inverse head and shoulder, you are waiting for what? Break out of the next plus what? Retest before continuation to the upside, right? Because this one also is what? It's a structural language. Do you get it? We call it what? A structural language. And then the candlestick body language is what? Having what do you call it? The morning shooting star. There's what? Hammer, that's a pin hammer, pin bar, or shooting star, or what do you call it? Yeah. And then we are going to having what? Engulfing candlesticks, and then we're going to having what? Morning star, and then evening stars. Those are the what? The candlestick what? Body language. So if you able to what? Naked your chart, you are going to see all these kind of what? Languages. If you're able to what? Naked your chart, you are going to see all these languages in a market. So if you're able to see, if you're able to identify them in your market, then you can trade, or you can go with the right side of the market, because it's good. It will be better than what? Trading with what? The right direction than what? Trading with the wrong side. Though you can benefit from if you for the for what do you call it? In forex, you can also benefit from the wrong thing you will do. But mostly, if you continue doing the wrong thing, you can't be profitable, right? You can't be consistent, profitable trader. But if you're able to do the correct thing every time, you increase your winning trade, you increase your winning rate, and what? Decreasing what? Your lose. You get it? Yeah. So let's go to the main chart. Let me show you my chart. So what you do is that we always want to see the correct chart than what? Making our chart dirty. I hope you are getting me. So always, please and please try to what? Naked. I'm not saying if you are using indicator, though if indicator is working for you, that's fine. I can't judge that. I can't tell you say indicator is wrong, so stop using, or so on. But if you join my class, I won't allow you to use indicator. If you join my main class, and then if I see you indicators on your chart, if you ask me any question, I don't think I will answer you. I don't think I will answer you until I'll see. If you ask me question about price action, that one I can answer you. But using indicators, I can't answer you. I'm not saying indicator is wrong. You can use it. You can use it. Yeah. Let me give you one psychology. And also, the one language is what? The trend. One language in the market is what? Market trend, right? Is the market trend. We have two types of what? Market. We have three types of market phase. Yeah, we have three types of market phase. We have the uptrend, and then we have the we have the downtrend. Sorry, three types of market condition. We have uptrend, and then what? Downtrend, and then sideways markets, right? We have a sideways, like giving us what? Equal prices. So what you do is that when you have to find out which actually market condition your strategy works for you. Do you get it? If you naked your charts before, if you are using indicator, you can't find all this one. If price is consolidating, you can see. If price is moving the upside, you can see. If price is moving to the downside, you can see. Because if price is moving to the downside, giving you a lower lows and lower highs, if you are using Bollinger will tell you it's time for you to buy, because the market is oversold. If you are using MACD will tell you to buy, because the price is oversold. Do you get it? But if you are using the red chart, you are still looking for what? Selling opportunities, right? Because you're going to waiting for price to come back to the key level, then you start selling from there. So you have to find out what actually market condition your strategy work for you. Trading is so simple, but if you try to trade all the time, you will find yourself making yourself stressed that you like you won't feel comfortable. You close the day with like you will suffer. But if you allow the price to come into your zone, you will get something. It's not market is trading 24. If you are trading currency, you're trading what on 24/7, 25/7. It's what 25 year, 24/5 year. It's traded what 24/5 year, and then VIX is traded 24/7. It doesn't mean you should also trade 24/7. You need to what look at the chart, because it's not all the time we need to what. It's something like VIX 75. Let me see, because the way VIX 75 is trading recently, if you are weak of price action, and also if you are weak on what do you call it? If you are weak on price action, you definitely blow your car before the correct move will come, because there is major move on the way coming. There's major move on the way coming. Recently, you can clearly see it from here that price is just trading in between here. It's just consolidating. So you need to find out what actually, like your strategy, the strategy you are using, what market conditions that works for you. What market condition that works for you. So if your strategy is working for you when price is consolidating like this, meaning you can what? Trade. But if your strategy is not working when price is consolidating, then you don't need to trade. Do you get it? So if you are under K-trade trader, it tells you that you need to what? Wait for you to see a breakout from here. You need to see either breakout from this key level, retest before continuation. Now we're going to have a trend. But recently, we're having equal prices. So where are you going to place your entry? Are you going to buy from, let's say, if maybe you are trading from support and then resistance. So you are going to take a buy here. Then if price reach here, you are going to sell here. If price reach here, you are going to buy here. You don't know when price is going to get a breakout. Let's say you take a buy here and price, look at here. Price were at here. It were trading between this zone and this zone. Can you see it? It were trading between this zone and this zone. So let's say you recently price it here and you take a sell trade here. Look at the movement. Look at the push to the upside. So meaning you are going to take a lot of, like from here, this 4 hours time frame. From here to here is not small money. Let's say you enter with 0.005. It will be about $100. Your $100 will go up. Can you see? And look at here too. Price is trading between here and here. And you take a sell here, you take a buy here. You are going to take about $200 loss. Do you get it? That's why you need to what? Exercise patience for market to show you the real picture before getting involved. That's why you need to what? Allow price to give you the real picture or the phase you wanted to go before you get involved. Because recently you can see that from the daily time frame, price is what? In the uptrend. Price is in the uptrend and has reached a certain zone. That's the nearest, the most recent high, and we are expecting price to push to the upside. But we found out what is in the middle of these zones and then that zone, the daily and the 4-hour zone. So we don't know who is going to win. Either sellers or buyers are going to win. So what you do is that exercise patience. What you do is what? You are going to exercise patience. Do you get it? Yeah. Thank you. For now, if you have any question, let me hear you. If you have any question, I think our time is up. So if you have any question, let me hear you. Alfred, do you have any question? Mr. Alfred? Mr. Iber, do you have any question?
No, sir. I came late, sir. No, sir.
Okay, thank God.
No, sir, I don't have any question. I understand.
Okay, Mr. Olus, you said you have a question you can ask. Mr.
Hello, good evening, sir.
Yeah, let me
I have a question.
Yeah,
thank you. Thank you for the teaching, sir. Please, I want to know for someone like me that actually want to take trade crash, boom. How is price actions going to help me? Because I was told that there's a lot of manipulation in crash and boost. So how will I be able to cope with it with a pure price action? Thank you.
Okay, good. Boom and crash, we still use the same strategy. The thing is, price action reading, there's no limit. You get it? There's no limit. You can see that I am using the same strategy trading all the assets, because it's the same way price is moving. Look at here. Do you have any different thing? If price is going down, can you see we were having a double top here? We got a breakout. This 4 hours time frame. So when we find out this price is doing something, you can just switch to the the nearest time, that's lower time frame, to have the momentum structure. When we say momentum structure, I'm going to see higher lower lows and lower highs from lower time frame before taking a trade. Because if you see something here on higher time frame, it's risky to take entry, because price can continue to the upside. Do you get it? So as soon as you switch your time frame to the lower time frame, and we see the structure developing, or the structure momentum of the structures, then we start looking for selling opportunities. Do you get it? So risk entry is the same strategy or the same psychology we use. Yeah. So there's no difference of using boom and crash. It's the same thing. We're having lower lows and lower highs. Price is moving the same way. I hope it's answered.
Okay.
Your question is answered.
It's answered.
Right?
It's answered.
Okay.
I just have this fear because yes.
The thing is, you just need to all depend on how you are going to position yourself. Do you get it? It depends on how you are going to position yourself in the market. Because let's say if you are trading with boom and crash and you are selling, if you take a sell trade here, you see the rejection. That's why you need to shift to the lower time frame to position yourself well. Do you get it? Your position will tell you are you doing the right thing or you are doing the wrong thing.
Okay.
Yeah, thank you.
Yeah. Thank you, sir.
Welcome. Mr. Dalali, you have any question? Okay, thank God. Mr. David, do you have any question? Mr. David? Or DJ Paul, do you have any question? DJ? Mr. Edit, do you have any question? Please, if you have any question.
Sir.
If you have any question, let me hear you. Mr. Do you have any question?
Okay, sir. I have one question now.
Okay, let me hear you.
Okay, sir. You say if, for example, now the market is moving in a downtrend, and then it breaks out the trend line. What if the market does not retest? Is it good to enter anyway, or I should allow the market to go in direction?
Yeah, it's a good question you have asked. If price is moving to a downside, right? If price giving us a lower lows and you wanted to buy, right? You want to look for buying opportunities. The thing is, the psychology is that before you look for buy opportunities, you need to see a breakout of recent swing high. Do you get it? We need to see a recent swing, the breakout from recent swing high, before we might see that price is now having momentum to the upside. Can you see if price break here, we're now going to get a high. This one is a low and a high, lower lows, and then we having higher highs where. Do you get it? So if price is moving to the downside, we are not interested to buy until price break the most recent high. Do you get it? Until price break the most recent high before you're looking for buying opportunities. I hope it's answered.
Yes, sir.
Yeah.
Thank you, sir.
You are welcome. Okay. Is there any question again? Mr. Henry, do you have any question? Mr. Henry, do you have any question? Please, Mr. Henry, do you have any question? Mr. Nakita, do you have any question? Okay, okay. So then we will end here. Thank you for joining me. If you like, you can just join my premium group. And that one is just $50. You can subscribe and it's lifetime mentorship. I'll just give you all my strategy, then you also can trade for yourself. It's better. There's nothing better than what? Reading the chart for yourself. Because if you always collect a signal from someone, you may get it wrong. So if you don't know what is actually going on in the market, you can't actually know the reason why the person is telling you to buy or sell. Because for me, for instance, I can tell you to buy or sell, but if you see some changes in the market, I can close my trade, and you are going to what? Still holding, and your price is going to hit the stop loss. So please and please try to learn and get the language down, looking for what? Someone to give you a signal. Thank you. May God bless you all. Have a good night. We'll see you later.